Hey everyone, welcome back to Corporate Decoder, the place where we look behind the curtain of big business and sometimes find a little bit of a mess under there. Today we're checking out an 8K filing from Sonder Holdings Incorporated, and let's just say this report is about to give us a little bit of a scare about where the company stands with the stock market. So what's the big deal with this filing? Well, Sonder Holdings Incorporated, or Sonder as it is known by its stock ticker S.O.N.D.E.R, has received some not so great news from the Nasdaq stock exchange. Basically, the company is at risk of being kicked off the Nasdaq because its stock isn't worth enough on the public market. Imagine your company's value dropping so low that the stock exchange says, hey, you don't meet our minimum requirements anymore. You've got some time to fix this, but better get moving. That's exactly what's happening here. Sonder received a notice from Nasdaq stating that they no longer meet the requirements of a specific rule. This rule is all about the market value of publicly held shares. Think of it as the total value of all the company's shares that are out there being traded by the public. Nasdaq requires this value to be at least $15 million, and Sonder just isn't hitting that mark anymore. They had a problem keeping this value up for 30 consecutive business days. Now, Nasdaq isn't just pulling the plug immediately, they're giving Sonder a bit of breathing room. The company has 180 calendar days, which is about 6 months, to get its act together. They need to prove that their publicly held shares are worth at least $15 million for a minimum of 10 business days within that time frame. If they can do that, they'll be back in compliance. This notice doesn't immediately affect the trading of their common stock or warrants, but it's definitely a serious wake-up call. What does this mean for the average person looking at Sonder? It means the market isn't valuing the company very highly right now. When a company's stock value falls below these exchange requirements, it often signals that investors are losing confidence or that the company is facing significant challenges. This could be due to poor financial performance, a weak business outlook, or just general economic conditions impacting the company's sector. For Sonder, a company that operates in the hospitality and lodging space, this could mean that people are spending less on travel and accommodations, or that competitors are outperforming them. It's also important to note that Sonder has both common stock and warrants. Warrants are like options that give people the right to buy stock at a certain price. When a company is struggling, both its stock and its warrants often lose value. This situation could make it harder for Sonder to raise money in the future by selling more stock or issuing new warrants, as investors might be hesitant to put their money into a company facing delisting. So, why has the market value of Sonder dropped so much? The filing doesn't go into the nitty-gritty, but we can look at broader trends. The travel and hospitality industry has been through a lot. While there has been a rebound post-pandemic economic uncertainty, rising costs, and shifts in consumer behavior can all impact companies like Sonder if their properties aren't generating enough revenue or if their expansion plans aren't paying off. Investors will react negatively. It's a tough business where you need to constantly attract customers and manage costs effectively. Looking at the exhibits, it seems like the most important part of this filing is the notice about the potential delisting. There isn't a detailed financial table provided in this particular 8K that breaks down revenue or profit numbers, which would typically give us a clearer picture of the underlying financial health driving this market value issue. However, the directive to include a cover page interactive data file suggests that the company is still maintaining its reporting obligations even under pressure. So, what's my take on this? Sonder Holdings Inc. is in a precarious position. The threat of being delisted from Nasdaq is a serious red flag. It suggests that the company's current market performance is not meeting the standards expected by one of the major stock exchanges. This could be a sign of underlying business challenges, whether it is related to profitability, growth prospects, or investor confidence. The company has a window of opportunity to turn things around, but it will require a significant improvement in its stock performance, which means convincing investors that the company has a bright and profitable future. A key risk here is that if they don't regain compliance, they could be moved to a smaller, less liquid exchange, or even be completely delisted. This would make it much harder for investors to trade their shares and could severely impact the company's ability to access capital. The good news is 6 months is a decent amount of time if they can take decisive action. Ultimately, Sonder needs to demonstrate to the market that its business is not only surviving, but thriving. Investors will be looking for concrete signs of improvement in their operations and financial results to drive up that market valuation. It's a serious situation, and how they navigate the next 6 months will be crucial for their future as a publicly traded company. Alright, that's our breakdown of Sonder Holdings Inc. Latest filing, what's your take on these numbers and what they signal for the company's future? Do you think they can turn it around? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community linked in the description below for more discussions and early access. Thanks for watching. See you next time.